Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
So we're here today looking at, well, a really monumental reporting period for the company Q4 fiscal year 2025. And we'll also unpack the guidance they gave for the holiday quarter. They're actually projecting it'll be their best ever.
Yeah, this period is super important. It's not just about the numbers, though those are huge. It's really a checkpoint. You've got major records being set, but also this massive new product cycle kicking off. The iPhone 17, the M5 Silicon.
Right, and the whole AI transition story really came into focus. It feels like more than just an update. It's like a strategic blueprint.
Exactly. When you dig into Q4 25, you see it's pivotal. It tells us a lot about where things are headed, strategically for the next few years.
Okay, let's just lay out the big numbers first because they really do grab your attention. We're talking $102.5 billion in revenue for the September quarter.
Which is massive for that quarter.
Yeah.
A new record for September. And then the full year picture. Equally impressive. $416 billion in annual revenue. Again, an all-time high.
And look, we have to talk about services. We've watched it grow and grow, but this year, wow, it finally crossed that huge threshold. Over $100 billion in revenue for the full fiscal year.
$100 billion. That makes the services division alone comparable to some pretty giant corporations, doesn't it?
Absolutely. It's a global financial powerhouse in its own right now, no question.
So, okay, our plan today is to really get into what's driving all this. We need to peel back the layers, right? We'll focus on, say, three key things. First, the velocity of these huge new product launches, especially that iPhone 17 family.
Yeah, the demand there seems intense.
Second, the big push, the accelerated investment in artificial intelligence. You see it in the Silicon strategy, the software.
Definitely. Apple Intelligence is the banner for that.
And finally, we need to look closely at the financial forecasts, the guidance, the cost picture, and why they're so bullish about this coming quarter being a record breaker.
Right, connecting the product strategy to the financial outlook. That's key.
All right, let's start with the details of Q4 fiscal 2025. September is often seen as just the ramp up to the holidays, but these results were, well, dominant globally.
They really were. That $102.5 billion total revenue, up 8% year over year, that's strong growth. But what stands out to me is the efficiency. Look at the earnings per share. September quarter record, $1.85. That's up 13% year over year, adjusted.
13% on the bottom line. That says a lot about profitability, doesn't it?
Yeah.
Operational discipline.
Exactly. And speaking of efficiency, let's talk gross margin for a second.
Right, 47.2%. Now, why is that number important for you, the listener? It really shows their pricing power and how well they manage costs.
And 47.2% actually beat the high end of their own guidance range. That's significant.
How do they manage that, especially with new products launching?
Well, strategically, it's impressive. Think about it, 47.2%. They've been consciously pushing towards higher average selling prices, right? Pro iPhones, Ultra watches, premium services, so holding margins near, the high 40s, even almost touching 50% during a massive new product ramp-up. That's sophisticated mix management. They're guiding customers up the value chain.
And you see that efficiency in the cash flow, too.
Oh, absolutely. Operating cash flow was a September quarter record, too. $29.7 billion. That's phenomenal conversion of sales into cash almost instantly.
Okay, so strong financials. What about geographically? Was this just a U.S. story?
Not at all. It was incredibly broad-based. September quarter revenue records across, well, almost everywhere. U.S., Canada, Latin America, Western Europe, Middle East, Japan, Korea, South Asia.
Wow, that's rare to see such simultaneous strength across so many diverse markets.
It really is. And the key takeaway for future growth, I think, is the strength in emerging markets. A consolidated record for the September quarter there, and the real standout, India. An all-time revenue record in India.
India? That feels like a huge strategic marker, doesn't it? More than just manufacturing.
Oh, definitely. It shows India is becoming a critical consumer market for premium tech, not just a production base. Their retail and local presence strategy there is clearly paying off big time.
And underpinning all this, as always, is customer loyalty, right? That installed base metric.
The foundation, yes. The active installed base of devices hit another all-time high, growing everywhere, every product, every geography.
And that installed base, you keep saying it's the service's superpower. Why?
Because it guarantees future revenue. It's the moat around the business. Look at the satisfaction numbers they share.
Yeah, they were high. iPhone at 98% in the U.S., Mac at 96%.
Exactly. iPad also 98%. That kind of stickiness is almost unheard of. It dramatically cuts the cost of acquiring customers for new devices and, critically, for every new service they want you to subscribe to.
Okay, before we dive into iPhone specifics, let's just touch on their cash position. They ended the quarter with a lot of resources.
A huge amount, $132 billion in cash and marketable securities. Even after accounting for debt, they're sitting on a net cash position of $34 billion.
What does that allow them to do?
Well, it gives them strategic flexibility for sure, but it also fuels massive capital returns to shareholders. In Q4 alone, they returned $24 billion.
$24 billion in one quarter. How?
Mostly through share buybacks. $20 billion of that was repurchasing their own stock on the open market. Plus, the regular dividends. It's a huge program, funded by that record cash flow we mentioned. They're basically generating cash faster than they can spend it, outside of their big CapEx plans. We'll get to those later.
All right, let's get to the core product, the iPhone. Even with the launch happening late in September, the quarter was really defined by the initial momentum of the new lineup.
Yeah, iPhone revenues set a September quarter record, $49 billion, up a solid 6% year over year.
6% seems good, but you mentioned context earlier.
Right. You have to remember, management was very clear. They faced significant supply constraints on several models, not just the older iPhone 16s, but crucially, the brand new iPhone 17s, especially later in the quarter.
Oh, okay. So what does that mean for the $49 billion?
It means that number was achieved while demand was actually higher than what they could supply. If they'd had enough phones to meet all the demand, that $49 billion figure, it would likely have been considerably bigger.
Got it. So let's talk about what's driving that huge demand, the iPhone 17 lineup itself. They called it truly remarkable. What are the key tech leaps?
Well, the focus was definitely on the iPhone 17 Pro, powered by that new A19 Pro chip. They're calling it the most powerful iPhone ever made.
Is that just about speed? Or is there more to it?
It's not just raw speed, it's about specific hardware for the AI push. The A19 Pro has a seriously upgraded neural engine that's the dedicated bit for machine learning tasks. But beyond the chip, look at the camera system, an all-new 8x telephoto camera.
8 times. That sounds complex to build.
Well, it is. The optics involved, the specialized components for that kind of zoom, that was apparently a big part of the manufacturing constraint early on. Made it the hardest model to get hold of.
And what about the rest of the lineup? The Air and the standard 17?
Yeah, they highlighted the new iPhone Air for its design. Incredible breakthrough, they said. Focus on being much thinner and lighter, appealing to people who prioritize that form factor, and importantly, the standard iPhone 17. It's now getting features that used to be only on Pro models. So it democratizes some of that Pro performance, making it a really strong value for people upgrading from older phones.
You mentioned upgraders. What did they say about who was buying?
They set a September quarter record specifically for upgraders, people moving from an older iPhone to a new 17. So the installed base is definitely motivated by the new features, probably the camera and the initial AI stuff.
But do we know the mix? Like Pro versus standard? Or upgraders versus people switching from Android?
They were pretty upfront about that. Said it's too early to tell accurately. Why? Because those supply issues are still messing with the data. If the Pro Max is constantly sold out, you can't really see the true demand split yet, can you?
That supply constraint. It feels like the biggest risk to that best quarter ever forecast for December then, even with huge demand.
Absolutely. If you can't build them fast enough, you can't sell them. Simple as that.
Okay, this brings us to China. Greater China. Always a complex region. Revenue there was down 4% year over year in Q4.
Yeah, that number always makes people nervous. But management immediately tied it back to those iPhone supply constraints. Their argument is the Q4 dip reflects a lack of available phones, not a drop in underlying consumer interest in China.
But how confident can we be in their optimism for China going forward? Given the history, the competition, they said they're thrilled with current dynamics, like store traffic being way up since the 17 launched.
Well, their confidence seems based on two things. One, that pent-up demand they think is now being met as supply improves. Two, they feel the new design and features resonate culturally. So yeah, they fully expect a strong return to growth in China for the December quarter. But look, the risk is still there. Domestic brands are getting stronger and stronger. Sustaining that high-end share needs constant innovation, which is why AI is so critical for them there too.
We also heard about government subsidies in China. How does that play into things?
It's a factor, yeah. Subsidies are boosting consumer spending across PCs, tablets, watches, phones. Management acknowledged it helps demand.
But there's a catch, right?
There is. The subsidies often have price caps. So while they might help sell the standard iPhone 17 or older models, the really high-end stuff, like the top-tier iPhone 17 Pro Max, it sells for more than the subsidy limit.
Ah, so those premium phones aren't getting the subsidy boost.
Exactly. Their success depends purely on the perceived value, the innovation, the camera, the chip, the design, not government help. It really highlights how they have different strategies for different segments within the Chinese market.
Okay, let's pivot now to what feels like the most strategic part of the whole story. The big push into artificial intelligence, built on their own silicon. They're framing their products now as the best platform for AI experiences.
That's absolutely the core message, and it starts with the hardware. The M5 chip for Macs and iPads, the A19 Pro for iPhones. They describe these as incredibly advanced, making their devices the very best place to experience the power of AI. And look, that's not just marketing speak. It's about designing chips specifically for these tasks, giving real performance advantages.
Can you break down the tech leap a bit more? We hear neural engine, M5 speed, but what does that actually mean for the user?
Okay, think of the neural engine like a dedicated coprocessor. It's optimized purely for machine learning stuff, pattern recognition, language processing, noise filtering, things a regular CPU or GPU aren't great at. And the leap is quantifiable. The M5 chip, they said it delivers 3.5 times faster AI performance than the M4.
3.5 times. Why does that speed matter so much?
Because having that dedicated hardware means complex AI tasks like processing an image, doing real-time translation can happen almost instantly right on your device without killing your battery or needing a constant connection to the cloud. Take the M5 MacBook Pro. It makes demanding pro tasks like analyzing high-res video for specific content possible right there on your laptop, which wasn't really feasible before. It raises the bar.
And this hardware power enables the software side, what they call Apple Intelligence. Dozens of new features, they said. Powerful, intuitive, and crucially private.
Right. And they're tangible things, like live translation, real-time language translation during calls or meetings. That needs instant on-device processing. Or visual intelligence, helping you understand objects in photos or navigate visual data. And Workout Buddy, using AI for personalized fitness insights based on your history and goals.
They also mentioned creative tools.
Yeah.
Image creation, writing assistance.
Yeah, sophisticated image editing, cleanup tools, and writing aids that can help summarize text or draft replies. And what really makes it an ecosystem play is giving developers access to these on-device models. That lets third-party developers build completely new kinds of apps that run locally, making the whole platform way more useful.
Looking ahead, what's next for Apple Intelligence? Personalized Siri seems key.
Definitely. They said they're making good progress on personalized Siri, aiming for release next year. The idea is it'll use that on-device AI to understand your context, your history, your preferences much better. And their broader AI strategy, it's very integrated. They're building their own Apple Foundation models, the core AI engines, to run both on-device and securely in the cloud when needed.
And they're open to buying companies to speed things up.
Yeah, they confirmed they're actively looking at M&A. Open to strategic acquisitions to accelerate that AI roadmap.
Okay, so if some AI tasks need more power than the device has, where do they run? That brings us to the infrastructure piece, private cloud compute, PCC.
This is absolutely critical. PCC is the bridge that ensures user privacy even when a task is too complex for your phone or Mac. And interestingly, they confirmed PCC is already running today, handling some of the more complex Siri requests.
So they're building their own AI cloud, basically. That sounds like a massive investment.
It is a monumental capital commitment. They specifically mentioned significant capex in 2025 just to build out this PCC environment in their own first-party data centers around the world.
Why not just use existing cloud providers?
Control and privacy. For the really sensitive AI models, they feel they need total control over the hardware, the software, the security. They can't rely on standard public cloud infrastructure for that core stuff.
And they're even building the servers themselves. You mentioned a factory in Houston.
That's right. A new factory in Houston, purpose-built for these advanced AI servers. The specific hardware-powering PCC just started shipping its first units. They have a robust ramp plan to get these into their data centers globally.
So designing the chips, building the servers, running them in their own data centers, that's deep vertical integration for AI.
Exactly. It ensures that even when your data leaves your device for complex processing, it stays within their tightly controlled private ecosystem, separate from the general internet. Their overall data center strategy is hybrid, though. They'll use this proprietary PCC for the sensitive AI workloads, but still use third-party clouds for other, less critical stuff. It's a massive structural investment to own the entire AI experience, from the chip in your hand to the server in their cloud.
So while iPhone and AI are clearly the big strategic headlines, we shouldn't overlook the other product categories. They provide really important financial stability and market reach, right?
Absolutely crucial. Let's start with the Mac. It had a surprisingly strong September quarter. $8.7 billion in revenue, up 13% year over year.
13% growth for Mac. What drove that?
Primarily the MacBook Air. Its strength and broad appeal really carried the quarter for Mac.
Why the Air specifically? Is it just the entry-level price?
It's more than that. It really shows the success of the M-series silicon transition at that mainstream price point. Get incredible performance, amazing battery life compared to older Intel machines. It's become the benchmark laptop for so many people.
And was that growth just in certain regions?
No, it was global. Mac grew in every geographic segment, even strong double-digit growth in emerging markets, which is impressive. But here's the stat that really points to long-term health. Nearly half, almost 50% of Mac buyers in the quarter were new to Mac.
Wow. Half were switchers or first-time buyers. That's huge market share gain.
Exactly. It shows the M-series architecture is really pulling people away from the PC world at scale.
Okay, moving over to the iPad. Revenue there was $7 billion, which is flat year over year. Why the lack of growth compared to Mac?
Management pointed to a tough comparison. The previous year's September quarter had the full impact of new iPad Air and Pro launches. So staying flat against that was actually pretty decent. And despite the flat revenue, the innovation pipeline is still moving, especially at the high end. We saw the launch of the M5 iPad Pro.
Bringing that faster AI performance to the iPad Pro as well.
Right. But maybe the bigger story for iPad this quarter was the software. iPadOS 26.
What was significant about that update?
It introduced a powerful new windowing system.
Hmm.
This is something pro users have wanted for ages. It makes multitasking much more like a Mac, boosting productivity, addresses a key limitation. They also highlighted the new visual design using this liquid glass material, they called it, made it feel more modern. Management actually described it as one of the most attention-grabbing iPad software updates in years.
Suggests they're really trying to push the iPad further into that post-PC productivity device space.
Definitely. And finally, wearables, home, and accessories, WHA. $9 billion in revenue, also flat year over year.
Flat again. What's the story there?
It's a mixed bag. The core drivers, Apple Watch and AirPods, actually showed growth. But that was offset by tough comparisons for accessories launched the previous year. So underlying momentum in the key wearables is still there.
Let's focus on Apple Watch then. The innovation there seems heavily tied to health and AI now.
Absolutely. Machine learning is enabling major new health features. The biggest one this quarter was hypertension notifications.
How does that work? And why is it significant?
It uses ML models analyzing subtle, continuous data from the watch sensors. Hypertension, or high blood pressure, affects like 1 billion adults globally. It's a massive risk factor for heart attacks, strokes. They estimate this feature could notify over 1 million users worldwide about potential hypertension, urging them to see a doctor. That's potentially life-saving preventative health insights delivered through a consumer device. It's unprecedented scale.
That's incredible. What else was new on the health front?
They also introduced Sleep Score, a simpler, more intuitive way to understand your sleep quality, again, using machine learning for analysis and providing tips to improve it.
And new hardware models, too.
Yep. The Apple Watch Ultra 3 biggest display yet, better battery, emergency SOS via satellite, and the Series 11 bringing the most comprehensive health features to the mainstream watch model.
What about AirPods? Any major updates there?
AirPods Pro 3 launched, highlighted for incredible sound quality and, get this, the world's best in-ear active noise cancellation.
Better noise cancellation. How much better?
They claim it removes up to twice as much background noise as the previous generation. That takes serious processing power, leveraging those new chips for real-time audio calculations. But the really exciting new feature is the integration of live translation powered by Apple Intelligence. You can have seamless, real-time translated conversations using your AirPods. Huge for travel or international communication.
Okay, let's move to the services segment. You called it a supernova performance in Q4. It really feels like the second engine of the whole company now.
It absolutely is. The growth, the scale, it's undeniable. Services revenue hit an all-time record, $28.8 billion just for Q4. That's up 15% year over year.
15% growth on such a huge base.
Yeah.
And the full year number.
That's the milestone. Over $100 billion for the first time ever in a fiscal year. Full year services growth was 14%. Just massive consistent performance.
And it wasn't just one thing driving it, was it? It seemed really broad.
Incredibly broad. That's what makes it feel so sustainable. Double-digit growth in both developed and emerging markets, and double-digit growth across almost every category. Advertising, App Store, cloud, music, payments, video.
So that confirms the power of that installed base you talked about.
Exactly. The ever-growing number of active devices fuels engagement. They hit new all-time highs for both the number of people spending money on services, transacting accounts, and the number of paid subscriptions. That engagement feeds the whole ecosystem.
They specifically called out payments growth. Apple Pay seems to be everywhere now.
Yeah, Apple Pay active users saw double-digit growth, and it's available in nearly 90 countries now. Building out that global payment infrastructure tied to the iPhone and Watch gives them a really powerful position in fintech.
And they're trying to get people to sign up for more services through bundles.
Bundling is key to increasing the average revenue per user, the ARPU. They mentioned AppleCare One, specifically packaging device protection with other services into one subscription. It encourages people who own multiple devices, iPhone, Mac, Watch, to bundle up and deepen their commitment. Makes it stickier.
Beyond the financial side, what about content? Apple TV Plus seems to be gaining serious traction.
It really is. They had a huge night at the Emmys, led all comedies with 13 wins. Severance won big for dramas with 8. They've now got over 600 wins and 2,800 nominations overall. That focus on high-quality, award-winning original content is clearly working to drive subscriptions and build the brand.
And they made a big sports announcement, too.
A massive one. A new partnership with Formula One. Starting next year, Apple TV Plus will be the exclusive place to watch F1 in the U.S. on race days.
F1. That's got a huge, passionate, and often affluent fan base, doesn't it?
Exactly. It's one of the fastest-growing global sports. Securing exclusive live F1 content is a major play to attract high-value subscribers and pull them into the Apple TV Plus platform. Big strategic move.
And they also marked an anniversary for Apple News.
Yeah, 10 years of Apple News. They highlighted its role providing access to hundreds of global publications. Shows that curated news remains a core part of their services offering.
Okay, this brings us to the final section, the forward outlook. Management gave some incredibly bullish guidance for Q1 fiscal 2026, the big holiday quarter. They're basically calling for the best quarter in their history.
It's a bold call, yeah. Let's break it down. Total company revenue, they expect it to grow between 10% and 12% year over year. That confidence really hinges on the iPhone 17 ramp-up meeting that massive demand we discussed.
Right. They specifically projected iPhone revenue to grow double digits year over year, which, if achieved, would make it the best iPhone quarter ever.
Exactly. And services are expected to keep cruising, too. Growth rates similar to FY25, so in that 14 to 15% year-over-year range, still incredibly strong.
But there was one area they flagged for caution, wasn't there? The Mac.
Yes, they were very clear about that. Expect a very difficult comp for Mac year over year. You have to remember last year's holiday quarter. It included what they basically call the mother of all Mac launches, new M4 MacBook Pro, Mac Mini, iMac, all hitting at once. Plus, there was a big wave of DRAM upgrades then, too.
So last year was just an exceptionally huge quarter for Mac launches.
What?
Makes sense that would be hard to beat.
Precisely. So the underlying Mac business is healthy, but that specific year-over-year comparison will look tough. It's important for you, the listener, to separate that short-term comp issue from the long-term health of the Mac line.
Okay, what about costs? Any relief on component prices?
Some slight good news there. They mentioned seeing a slight tailwind on memory and storage prices. Should help margins a bit eventually, but tariffs are still a big factor.
And are going up.
Going up. How much? The projected impact is climbing from $1.1 billion in Q4 to about $1.4 billion in Q1. That's tied directly to the much higher sales volume expected for the holidays. But here's the critical nuance. Even though the dollar amount is rising, that $1.4 billion estimate already includes the positive impact of recent tariff changes in China. Tariffs on some key products dropped from 20% down to 10%.
So without that reduction, the $1.4 billion figure would have been much, much higher because of the increased holiday volume.
Exactly. That percentage drop provided a really significant offset. Otherwise, the tariff hit could have seriously pressured margins.
Speaking of margins, gross margin guidance looks pretty healthy despite everything, between 47% and 48%.
Yeah, that's strong. It's actually expected to increase slightly from Q4. Why? Higher operating leverage, basically, spreading fixed costs over way more sales in the holiday quarter, plus a favorable product mix, meaning more sales of those high-margin Pro iPhones. That strength offsets the slightly higher initial costs you always get when launching brand new products.
Now, the biggest signal about their future strategy, especially AI, seems to be in their spending plans, right? Operating expenses, OpEx.
That's the number that jumped out. OpEx for Q1 expected between $18.1 billion and $18.5 billion. That's a huge step, up an 11% year-over-year increase compared to Q4's spending rate.
18.5 billion in one quarter on operating expenses. Where is that money going?
Primarily R&D, research and development. They were explicit. The driver is massively increased investment in AI development and their ambitious future product roadmap.
So this is where we need to inject some reality check, maybe. Spending that much on R&D, $18.5 billion, that's a significant financial commitment. It underlines how all in they are on AI.
It really is. It's their highest priority, clearly backed by huge dollars. But it carries risk, doesn't it? What if the AI features don't land as expected, or rollouts get delayed? Or what if competitors close the gap faster than anticipated?
Right. That level of investment could depress short-term profits if the big revenue payoff from Apple Intelligence takes longer to materialize than they hope. They're making a massive bet here.
A massive bet on the unique integration of their silicon, software, and now this private AI infrastructure paying off big time and soon.
And it connects to their broader investment commitments, too. They mentioned a huge number for U.S. investment.
Yeah, $600 billion in the U.S. over the next 4 years, focusing on AI, silicon engineering, advanced manufacturing like that Houston AI server factory we talked about. It shows they're managing for long-term structural dominance, not just the next quarter's results.
So let's bring it back to that infrastructure point for final thought. This huge commitment to building out their own private cloud compute, PCC, globally. What does that mean for the bigger picture?
Well, it's potentially profound, isn't it? You have a company with this massive, loyal user base and total control over its silicon deciding to build its own privacy-centric AI cloud. How might that hybrid model using their own PCC and third-party cloud shift the balance of power in the wider cloud computing world, especially as on-device AI gets more powerful?
It feels like more than just a tech decision. It's almost geopolitical, like you said. If their PCC offers a genuinely better, more integrated, more private AI experience, that's a huge differentiator against the big cloud players or other AI models that rely on less transparent, centralized processing.
It could reduce their dependency on providers like AWS or Google for the really critical AI stuff. The device itself, the iPhone, the Mac, becomes an even more valuable private gateway to computing's future. That drives loyalty, keeps people in the ecosystem, and fuels more service revenue.
That connects all the dots perfectly. So we've seen record financials, a massive new product cycle kicking off, and this huge strategic pivot driven by enormous investments in AI and their own silicon. This whole discussion confirms they're playing a long game now.
Yeah, it's about building the fundamental OS for intelligence over the next decade, not just optimizing quarterly sales. It's incredibly disciplined, focused on those unique integrated solutions.
And the hardware launches we see are just the tip of the iceberg, really. They're the visible part of this deeply integrated software, silicon, and services strategy that's now hitting incredible financial scale, highlighted by services breaking $100 billion annually.
Absolutely. And that strategic ambition underlined by that $18.5 billion quarterly R&D spend, it tells you the coming year is going to be all about seeing the results of this massive calculated bet on private AI.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.